All right. It was I don't know. Okay, so whoever was green last week, good job. I feel like last week, if you were red, I feel like last week was a little harder than most. So if you were red last week, don't even feel bad. I felt like last week was probably one of the harder weeks besides Friday. Friday was the morning price action. Friday was beautiful, but other than that, I did not feel like price action was the greatest last week. Um, so again, if you're felt that, then obviously just know price action was not easy. First of all, look at this Euro play. This is sell side. This was a nice play. Private against out the break even though. Um, so today I wanted to go over kind of uh not really inverses, but I want to go over like good targets, if that makes sense, and how the market really moves and how it has to move depending on the situation. Um, so this can be applied with the 2022 model, can be applied with the inverse model, can be applied to the breaker model. Okay, and the thing that I see that some people not really understand is when they're set their price targets, okay, they don't understand like if how to set targets if their bias is wrong. Okay. And the problem and why they don't know how to do that is because they don't know where the market should go if they're wrong. Okay. So just to start off, okay, in this situation right here, we took out sell side right here. Okay. Buy side. We took out buy side here. Okay. Now let's say you're short biased. Okay. And let's say you go to the smart time frame. Okay. You look for a 2022 model. Okay. We'll go to the 5 minute. Okay. So you look for a 2022 model. Or you can look for an inverse model. It doesn't matter. So in this situation, okay, you can very clearly see we get a inverse right here. Okay, we'll just call this the 2022 model / inverse. Okay, again, a little more high probability because it is an inverse, but obviously you could call this a 2022 model because of this in the structure break. Okay, and we take out buy side. So what I see a lot of people do for some reason is they short here, and that's great. That's a good entry. But they don't really count for if their bias is wrong. They don't know where to target. So automatically my first target, if my bias is wrong, is going to be here. Okay, why here? Okay, I always look for the intermediate term low inside of a fair value gap. Okay, and you can very clearly see this is low inside of fair value gap. And if my bearish bias is wrong, okay, what's wrong if I target? What's wrong if I take a play and I don't and I try to hold to like way down here? I mean, I get the thought process, but what's wrong with that if the bias is wrong? It's not bad RR. It's just if your bias is wrong, you're going to try to hold a full position. Okay. And what's wrong with this in specific? Okay. Let's say I was bullish bias here. Okay. What would I expect? If I'm really looking for a long here, what would a good long entry most likely be if I just have this marked out? Yes, I know plus EV. So if we have a bullish bias here, where's a good long entry probably? Yeah, OTE, okay. And you can see OTE in the 0.79. Okay, see how they line up with this low? So does everyone agree this would be a good long entry if we sweep this low and then hit this 0.79 if the bias is bullish? Okay, so obviously right here, this would be a good long entry, okay? And the only reason is because it's the OTE and 0.79. Okay, so if you're ever shorting, okay, again, I see a lot of people doing me, and this is just lately. They go, "Oh, I got stopped out of my full position." I'm like, "Well, did you account for your bias to be wrong to do scale, where we might reverse if your bias was wrong. And they're like, no, I try holding my full position. Okay. And I know some of my ICT traders do that, but I think that's really hard and really stupid because it's just, I've back tested and I've just based off my own experience. I used to try to hold the hold position. And yeah, my win rate was like 60%, but I feel like there's more pros in upping your win rate and lowering your risk reward, because I think it could be a little more profitable if you up your win rate but just have a little bit less risk reward, which means scaling. And the reason why you can up your win rate is because of the free trades that this creates. Okay, and trading like this creates so many free trades, because if the bias is bullish, do you agree this would make sense for a good target if the bias is bullish? Say yes or no for like a pullback entry. Yes. All right. If the bias is bearish, do you agree this is a good target if you're bearish bias? Yeah, exactly. If the bias is bullish, do you agree this is a good target for a bullish entry? Okay, and if the bias is bearish, do you agree this is a good target for a, if you're in a short? Yeah, so do you see how the answers for this was yes and yes, but the answers for this were yes and no? So you really got to be thinking about, no matter what the bias is, okay, you have to come to the market with, okay, if I'm wrong, I know we're going to bounce here, and that's where your scale spot is. Okay, and is that easy? No. When I first started learning ICT, okay, I'm telling you guys this is a good target. Do you really know why this is a good target for you new guys? Probably not. When I came into this market and I started learning ICT and I took a short right here, I would have had no idea this was a good target if it wasn't for screen time. Like, I'm telling you guys, these are good targets. Why? Because just from screen time, it's like an intermediate term low inside these fair value gaps are created. They always seem to hit on the reversal. And I never would have known that without screen time. Okay, this is not really something I feel like a lot of people say, but this is just a good target I see the market repeatedly go after if we hit buy side or sell side. Yes, it's a low-hanging fruit target. And that's just something I learned from screen time. So what I'm trying to tell you guys is it's not going to come easy. You're not going to know where the target is right away. You're going to be like, "Well, I'm short, but I don't know where to target." And that's a problem some people in my premium have. I don't know if Steve is in here, but Steve's always asking me like, "Where do I target?" Okay? And through screen time, okay, I bet you he'll figure out better targets, but with screen time, you kind of look at these lows and you'll repeatedly see the stand out inside of a rally gap, and you'll repeatedly see, okay, this is a good target, especially when we hit this buy sign and retrace, even if the bias is so bullish, because a lot of times we'll go back down to this intermediate term high. Okay. And the reason is there's actually a key reason why we do that. Which I was telling someone in a one-on-one call yesterday. Okay. If I think maybe we can go on the 10-minute chart to see this. How do I see the 10-minute chart? I know there's a way. Oh, I see. So if we go like the 10-minute chart, okay. For some reason, and it's probably just the algo. It's how that algo is coded. Okay. We always go for the low. We always go back to after we take out a certain high or just the high in general, we don't displace over it. If the bias is bullish, generally we'll go back to the last swing low made. Okay, we'll go back to the last swing low made before the high. Does that make sense? So see how right here, this is the last swing low made because there's a low, lower low, higher low. Before, there's no swing low here, 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 there's no swing low here. The last swing low before we hit this high is right there. And it's got to be the way the algo's programmed, because I've seen this way too much for this not to be like a actual truth. But a lot of times we'll go back down to that swing low that was created before we hit buy side, the last swing low, even if the bias is bullish. Does that make sense to you guys? And again, that's just the way the algo is programmed from what I've seen in my screen time that I have. Okay. Yeah, exactly. It's got to be something with. I can probably go into deep science and explain why, maybe, but it's just something you got to know. Okay, the last swing low created before we hit a high, generally that last swing low created is return to. And sometimes what might happen is the last swing low could be created here. If the last swing low is here and you're looking for a short, would the risk reward be worth it? Yes or no? Yeah, probably not. So there's going to be times where we do take out a certain buy side or sell side. Okay, and we're going to create a swing low before, but the swing low is just going to be really high and the risk reward might not be good. So these setups will not happen every day where the last swing low we create is way down here for a short. But if you want to monitor or look at something this week, look at like when we hit a higher and low, okay, and we have no displacement over it. Keyword, no displacement. We could hit a high and we could still displace over it. That doesn't count. It has to be a high you see us hit, and then you start to see us fall back under with not a lot of displacement. You can just clearly tell if you back away from the chart, not a lot of displacement over this. So it's got to be one of these highs. And if you backtest, like how often do we go back to the last swing low created before the high was hit? Okay, you'll find good results. All right, and that's why it's such a good target. Okay, and that's just taking me screen time to find. I didn't really understand that when I first started trading. And I remember people would tell me that, and I still didn't understand it until I saw it in live time a bunch of times. So be looking out for that. Okay, the other thing I want to talk about is, I'm blanking right now. So I'm just going to continue talking about the target thing. So obviously, this is why this would be a first target. Okay, I just explained why this would be a good target. Okay, where would another target be? This is where it gets a little more complicated. Okay, a little more complicated. Again, this is a screen time thing. Does anyone know where the next target would be and why? And I did call this out in live time, so this is not hindsight what I'm about to show you. Four five oh four. Why 4504? OB under fair value, right here. Nope. Again, this is not an easy question. Think outside the box here. If you're on the chart with me right now, even better. Where would the next target after this be? Where's the next good target? All right, so BQ said the next swing low, okay, which would be, would you mark this one or would you mark this one right here? Which one would you mark? The lower one. Okay, why the lower one? First of all, why the lower one? So I'm going to explain why the lower one just so everyone's caught up. Yes, because how close they are. Low resistance liquidity. So chances when we hit this one, chances that we hit this low mean we're almost guaranteed to just hit this low next. Okay, and it's going to be quick because they're so low. So I would target this one and not this one because just you can't target this one, but I mean, they're so close. Like this wouldn't be a bad target. Okay, low resistance liquidity. But what else? Why this low? Like there's a lot more to this chart that you are not seeing, which is why I said think outside the box. We're already in discount up here. Again, when I say think outside the box, that means you probably can't see it right now. Yes, so Marshall, higher time frame. So there's something on the higher time frame that's very key to understand here. Yes, so exactly what Mike said. It's a higher time frame, intermediate term low inside of fair value gap right here. Okay, so I know if the bias, and this is actually the 15-minute. Okay, I know if the bias is bullish, okay, I know if the bias is bullish, we'll come down here probably. Okay, one, because if you look at the 15-minute chart, okay, you can see that what I just talked about. I talked about price will usually go to the last swing low where it takes liquidity. There's a swing low here, there's not a swing low here, not a swing low here, not a swing low here. So there's no swing low until this one when we hit this high. So that's the first reason. But the other reason, and if you look at MNQ, you can really see it. The other reason is, what do you notice when I put these charts side by side? Okay. And pretend you have a bullish bias right now. Doesn't that look like such a good long entry if you had a bullish bias? Like, doesn't it look like a really textbook long entry? It's a fair value gap on ES, okay? And it lines up with a BPR and NQ. See how textbook that looks? Okay. So that was kind of the other reason. And I actually called this in live time on Friday. I was like, I don't see us going any lower than this 8 AM Sibi or this, and we hit it, or Bissy, and we hit it, and I'm like, okay, there's a target. I don't see us going any lower. We got a nice bounce. Okay, but why that one? It's because it's at the 0.79 range, okay, and yes, as I showed you. And it's a PPR. And it was the Friday, it was the last TJF, and I know we weren't really below 30% or whatever, but I generally don't expect us to dump in the Friday's close when we have a red candle for the week or the weekly expansion. So it's just, you have to be on the other side and be like, okay, if I'm long bias here, what looks like a good entry, okay, and I would say this looked like a good entry, this looked like good entry below this wick on the 5-minute, and you have to be checking the higher time frame. And if you just, for people in here who have a lot of screen time, okay, you newer people won't understand this. You can just tell, how many times have you seen this exact signature and price? This exact signature price. How many times have you seen us not just dump straight through this? How many times have we retraced off this? Okay, if you watch price a lot, okay, you know we're bound or most likely to get some sort of retracement off this or some sort of bounce, even if it's not back to buy side. So that was kind of the other reason. That's more of a screen time thing. Like I said, there's going to be signature setups where they just look so good and they repeatedly kind of maybe not bring us 100 points back up, but they repeatedly have an impact on the market, meaning they repeatedly act as a speed bump. They repeatedly affect price. They repeatedly really make price reverse at least a little bit. Okay, and this is just one of those setups. Okay, and it was an SMT as well. Okay, so if you look, right, you can see ES made the higher low, and you can see we made that lower low on NQ. And again, this is just one of those screen time things where it's going to be like, oh, there's no way we don't at least bounce off this. And then it's also screen time that you got to realize, oh, the time's 3:30. So we're at a spot where we really don't dump through a lot, and we're at 3:30. We have 30 minutes in the market left. And if you kind of add those two things together, okay, do you really expect us not to bounce off that 30 minutes in the close, right? Probably not, okay? Or you probably would expect us to bounce. And that's just, again, like I said, it can be complicated, but that's a screen time thing. Okay, but that's kind of, you have to be on the other side of the target. You have to be on the other side of the market when you're in a long position. You have to be paying attention to, okay, if I was a short, where would I look to the short? If I was long, where would I look to long, right? You have to understand that. Um, and that's where a lot of you guys are getting stopped out. You guys aren't putting your stop loss to break even. You guys are just holding your full position recklessly. Like, and I know there's people in here that doesn't apply to, and I taught you to scale and you know when to scale, whatever. But for you guys who don't do that, you just have to be more aware. You can't just be one-sided. I've been in a position so many times. I've been in a long position so many times where I'm like, all right, if this long hits this high, for example, if this long hits this high, I'm going to hold a runner to right here. How about that? But if we get a short setup after, I'm immediately stopping my runner and I'm just totally reversing the position. Okay, and that's just me not being totally one-sided, being like, oh, we're going to moon coin, right? I'm not thinking we're going to the moon every single play. There's times where I'll enter long, but I'm bearish. And I'm just like, okay, if this happens, I'm immediately going to just take a full-size position the opposite way if I see this or whatever. Okay, as long as obviously the first position worked, I'm not going to revenge trade that. But, and I think that comes with screen time. Okay, I think the more you're in the market, the more you understand, okay, even if I'm bullish, I understand to be bearish here. Even if I'm bearish, I understand we should be bullish here. Okay, and that's just a big thing that has come up with screen time. When your bias is bullish, do you ever take puts? Yeah, I take puts when my bias is bearish. I'll take puts or I'll short all the time. Like there's times where my bias was actually bearish here. Okay, coming down. Like my bias is bearish Friday afternoon, but I'm like, there's no way we go below this. And I said that on chat, in my premium chat, multiple times. I'm like, and my index commentary, I said there's no way we probably go below here. I took a demo long and I took one runner and I got stopped out the rest. But I'm even with my bearish bias, I understood puts or shorts were not the move here. I understood we were probably going to get a decent retracement. And again, like I said, that's screen time. That's not going to come right away. That's not going to be easy. It's going to take some time to really say, okay, if my bias is bullish, I understand. I can't be really wrong or right about the bias. Okay, you can't be wrong or right about the bias. You have to objectively read price action. Okay, you have to watch what is price actually telling you. Can't be an opinion. Okay, a lot of people think, oh, we should go up if CPI is good. Okay, but if CPI is good and you start seeing bearish order flow, are you still going to think we're going to go up? Probably not. Okay, it all has to be objective. You have to read it you have to read price action objectively. You can't just say, okay, I think this is going to happen just because of this. Okay, you have to see what is price telling you. Does it align with what I think? And if the answer is no, that probably means you probably have a lot of hopium because you're either caring about an old target that didn't get hit and you're like, oh, I still want this target, even though the price action is total opposite of that. And that's where your ego comes in. You can't have a big ego. You have to understand, okay, I'm going to just change my bias here. I see price telling me the opposite way. I'm not going to try to fight it, whatever it may be. So that's that. Confusing sometimes how fair values can be targets and things you can trade into the play to work. So I don't target fair value gaps I target fair value gaps all the time, but the main thing I do target is those lows inside the fair value gaps. I mean, this is generally like because I wasn't really targeting this for this fair value gap per se. I was more targeting this low. Okay. And I was more targeting this low because I know it's a good bounce spot if the fair value gap doesn't work. With this, however, and I'll go over my bias for the week in a second. For this, however, generally I won't scale here unless I know it's a signature price I've seen us retrace off of a lot of times, which this one is. But for example, if I go up here, all right, let me see if I can find a good example. Give me one moment. Like right here, if I'm long here, I'm not really scaling here. The reason why is just because we are so far in the discount and lower time frame, and I see how we kind of came up, didn't hit buy side. So I'm really expecting price to go to buy side at this point. So like, there's going to be times where I do scale fair value gaps, and there's going to be times where I know we're probably going to rip through it. The times I know we're going to rip through it, okay, I'm not going to scale. The times where I've seen, okay, this is a really good rejection spot, we're in premium or we're in discount, we're in OTE, I'll scale there. However, if there's times I'm unsure about, okay, maybe I'm unsure about this, I will scale. Okay, just take the benefit of the doubt. I will scale if I'm unsure. And there's still signature and prices where, again, I'm not traded the market for 10 million years. Okay, I still need more time, obviously, just like everyone else. But there's signatures and price where I still don't understand fully, where I'm unsure, I'll just scale just in case I'm wrong or right. Even if I'm right, I don't care. So bias for the week. I'm gonna end it with this. Again, this isn't gonna be a long class. I do have to do some work. So my bias for the week for now is all going to depend on this for really up on this. So as long as we don't trade above this right here, okay, and as long as we don't trade above this, I'm bearish for now. And the reason I say that is because you can see this low is not really, it got so close to being hit, but it wasn't hit. So I figure we'll probably, as long as we hold this again, if we really violate this, will I change my bias? 100%. Okay, but for now, as long as we don't trade above that, okay, I want to see this low hit. And the only reason why is because we came so close and just didn't hit it. Is there an SMT? No, there's no SMT. Okay, you can see this is the low, made a higher low, made a higher low. So no SMT here at all. So, and you can just see there's probably a lot of stops under these two lines. Again, relative equal, not perfectly equal, which doesn't help, but they're relative equal. So, I mean, as long as we hold this, which is also BPR, okay, I'm bearish. But if I really see us violate this with a lot of speed, okay, I'll probably end up changing my bias. But that's kind of, if you watch my condition video, that's a condition I create. So I like to create a condition at the beginning of the week. And I would say this one's pretty simple. Why is this a pretty simple condition? This is a question you answer. Why is it a simple condition? Not quite, Aiden. Does no one know the answer to this? Why is this an easy condition? The condition is this 4-hour fair value gap I've marked. A lot of my premium members always get this right, but you guys who are not on my premium never get any of this right. All right. So again, it's because there's only one fair value gap. Right? It's very obvious. It's the only one here. It's like there's no fair value gaps above it. Okay, there's no fair value gaps above it. So I know if we break it, we're probably going to go up to here. That's why it's the easy condition, because it's only fair value gap. Versus if we had like 50 here, I probably wouldn't have a good condition. So does everyone understand? If I go to the 1 hour, okay, still a pretty simple condition. It's still a whole fair value gap here. But if I go to the 15-minute or the 5-minute, gets a little messy over here. So I just like to stay in the 4 hour for this one, and that'll be my condition. Yeah, that's a really nice market maker sell curve. We should definitely go to that low. Is that playing out right now? Yeah, those are really nice curves on the. That's like definitely sell model. You can just tell by the curve and the distribution and the accumulation. The fact that we get that distribution inside the fair value gap, that consolidation type look, that generally means we're just gonna go back down. So yeah. All right. Does anyone have any questions before I get off? Would it be? Yeah, trade news are the best days after the news comes out. If it's Mondays and if it's a Monday and no news day, then I would not recommend trading. But I mean, you can if you want. I can't tell you what to do. For Forex, should you be waiting till 9:30? No, Forex is fine to start at 7 a.m. What time's the best time to trade? 8:30 to 11 o'clock on futures. And if the 8:30 to 11 o'clock session's bad, the lunchtime setups and the early afternoon setups are pretty good. It's 9:34 p.m. On 15-minute, it looked like an inverse. I wouldn't be using any inverses on the 15-minute at the moment. I'd just be looking the lower time frame for inverses. The higher time frame, there's too many. There's too many variables to play with. There's this, there's this, there's this. When I see all these variables stacked on top of each other, I don't like to play them. My monthly bias in NQ, bearish. It's bearish for now. But if we bounce here and have a nice reaction off this daily fair value gap, then I'm gonna have to be bullish. But I'm really looking for us to violate this. So if you don't trade Mondays with no news, same Monday. Yeah, nah, not really. I feel like the price action gets the best if it's a news day and the AM price action isn't good. That's when PM and lunch get good. But if it's a no news day and AM's bad, PM and lunch won't be that much better. Typically. Yeah, no problem. Damn it. 680. Yeah, I see what you're talking about. So you're talking about that one right there. Again, like I said, I know this is an inverse, but I feel like the higher time frame's bearish still. I don't know. It's just me. Yeah, I'll be live streaming tomorrow AM for premium members. All right. Again, plus AV. See how there's that bottom bullish fair value gap too? That's why I don't like that inverse that much. It's not really like, I don't know. There's just a lot of variables. All right, I think this is gonna be it. Appreciate you guys all coming again. I try to do these every week. There might be a couple weeks I won't be able to do these with work, but with all my work I have to do. But again, I'll try my best. So I'll see you guys later. See you premium members in tomorrow's stream. And other than that, peace.